Just like people don't like driving in cities, most people don't like managing
People
money.
don't like banking.
Exactly. No one wants to. We use money to do something else.
Yep.
We use like we don't wake up in the morning and go, oh, this credit card's so cool, or this mortgage is just so exciting. You get a mortgage to get a house because you have a family, right? It's that classic marketing cliche, but that's why mortgage products are sold normally with, a mom and a dad and kids, or whatever the modern blended variety of that is. That's how you sell it. You don't sell it by saying, hey, we've got this really cool, financial technique or logic built into the product. You sell it by saying, you want to live in this house. You sell a card by saying, you want to go on this holiday, you want to go on this vacation.
Jim Roos from Riyadh, Saudi Arabia, at the Money Pot at Money 2020. I'm here with Ronit Ghose and from Citibank, and we're going to be talking about AI and the transformation of banking over the last 5-10 days and beyond. Ronit's had an illustrious career, quite a long career actually at Citibank. How long has it been?
I think it's too long to talk about, isn't it, Jim?
Well, you're talking to a guy that's been in banking for 45 years plus. So,
I joined Citi, or a predecessor company of Citi, in London in 1997. 1997. So we're sitting here in 2025. So you can, as the Americans say, do the math. That's 28 years. And the last 9 years I've been based in Dubai, and the previous 19 years I was in London.
Tell us a little bit, tell my audience a little bit about what you're doing right now, what your role is at Citi.
Sure. So I run a think tank called Future of Finance, and it does what it says on the tin. We're a analysis, content, forecasting unit, and we look at how technology, policy, regulations are changing the world of money and finance. We set this unit up about 5 years ago, give or take. The work we do in the unit has been going on for at least 10 years, but I used to do that as my side gig before. Previously, I was global head of financial research, so stock market research. I was a stock market analyst. I started my career writing notes about banks like Northern Rock and Verenigd Sparbanken and Julius Baer, European, UK banks. About 15 years into that career, or 18 years into that career, we began to realize this thing called fintech in the early 2010s was really taking over London, where I was based, and Asia. And part of the reason for relocating was I wanted to be closer to the economic center of gravity, which has been somewhere around New York, London for much of the 20th century, is shifting back east to where it used to be in the 18th century and the 17th century, somewhere between China and India, or probably in the Stans if you did the kind of geolocation of the economic center of gravity. And so I wanted to be back nearer where the future was being built. And about 10 years ago, I got fascinated by what was happening in China. And we wrote in English, I believe, one of the first in-depth reports about Chinese fintech, which went viral. And I was like, okay, there's a lot of people interested in this. There's a lot of things happening on my doorstep in London. It's like 2014, 15. So I went down the fintech and the crypto rabbit hole, and Citi, my bosses have now retired, but all credit to them. They let me
follow that path.
Yeah, get a little bit off the beaten path, because it wasn't obvious in the mid 2010s to be writing about and spending a lot of time hanging out with fintech founders and crypto entrepreneurs. They gave me that rope to do something different. And then what was my evening job or my weekend job became my day job. And we set this unit up about 5 years ago.
Well, it's interesting because, as you mentioned, it moved from the Western countries to the Eastern countries. And so much changed so quickly between Ant and WeBank.
Oh, totally.
And they set the standard. I went to Shenzhen. Actually, it was the very beginning of 2020.
Oh, okay.
And
just as COVID is. Oh, yeah.
And went from, actually, that trip took me from Shenzhen to Seattle to San Francisco to Boston to New York. I go, I may be COVID #1 and not even know it back then, but it's interesting how fast everything changes as far as where the evolution of the industry is going.
Yeah.
You wrote a book in 2023,
Yeah.
a bestseller called Future of Money.
Yeah.
And what's interesting, even in that book,
Yeah.
some of your futurist views have more than come true
Yeah.
and gone beyond that. So what have you seen
Yeah.
since you wrote the book?
Yeah.
And what did you predict or what did you see coming that's come? I mean,
Yeah.
certainly Africa and South America and India
Yeah.
are three hotbeds now,
Yeah.
even beyond where China is and what we're trying to do in
Yeah.
the UK and US.
Yeah, totally. So you're right. I wrote this book in 2023. I think it was 2022. A lovely lady working for a publishing firm approached me. She pinged me on LinkedIn and said, "I think you should write a book." And I was like, "Oh, okay." I'm pretty busy.
Yeah.
But she was persistent. I knuckled down and wrote it in 2023. And then we published it in March 24. So it's about just over a year out now. And I just saw, it's still, I mean, you've, like many of my friends, you've done a lot of books. So it still excites me when I see my book in bookshops. So I was in Dublin this weekend, just gone before this conference in Riyadh. And my son and I, the youngest boy, we were just hanging out in a bookshop. My wife was shopping somewhere. And I said to myself, I was looking for actually a book about China. I was looking for this new book called, what's it called? Breakneck? No, by Wang. You can put it in the show notes. It's really, it's all about how China's run by engineers and America's run by lawyers today. I mean, 100 years ago, America was run by engineers. And what's really interesting is I was looking for that book, not my own book. And then I found a solitary copy of my book in the business section. So I called my 11-year-old over. I said, "Look at that." And he was just so excited to see it as well. Almost as excited as me.
Well, it's interesting because right now my first book, but I'm a co-author with Brett King on this new one about Branch Tomorrow. Which is interesting because it's my first time. We're doing a book signing today, which is kind of crazy.
Yeah.
But what have you seen since the book that has really maybe shocked you a little bit about what's going on right now in the industry?
In terms of speed of change, so the book is all encompassing. It starts with the history of money and the start of kind of monetary innovation, which again comes out of China, fiat money as we know it. So paper notes, banknotes, the proto banknotes come out of China about 800, 900 AD. And then fiat, which is paper notes not backed by gold or silver, that's not a 1970s Nixon administration thing. It goes back to Kublai Khan in the late 1200s. So the book starts with that kind of prehistory, and then it goes on to what we've lived through. So Alipay, WePay, the Revoluts, the Monzos of the world. And I was lucky being in London at the time because 10, 15 years ago, things are really happening in the UK.
And the regulations were kind of keeping pace compared to other regions.
Absolutely. The UK regulator and the policy establishment came out of their learning from 2008 was we need more competition. We need just more players in the market. And so London had all of this finance talent and maybe an optimism about the future still just about. It was beginning to fade, but that optimism that there was in the 1990s in the Blair administrations, that kind of carried on a little bit under the initial sort of Cameron Osborne administrations. And they had a very pro-reform innovation policy. And there's just things happening in London. And so that kind of fintech wave, I think, is sort of played out. What's kind of really exciting, and I'm sure that we'll be talking about it during this conference, we talk a lot about it in Dubai and Abu Dhabi, where I'm based, is digital assets, for want of a better word. So it's not just about crypto, but the whole on-chain money revolution. So crypto, stable coins. And what's really a big, big thing this year, and we wrote a report about this in April, and we called it, this year is like for institutional adoption of stable coins or blockchain, specifically the ChatGPT moment. Now, I don't mean like everyone and their granddad is going to start using stablecoins in the street.
But the front edge of that.
But the institutions have been doing innovation theater for a decade on blockchain. And then the switch got flipped. It's suddenly become a real thing. It's not just about innovation being done by startups. The biggest banks in America, my own company, others, we all know the names.
Yeah.
You can fill that out later, Jim. But those, the biggest banks in America, in Europe, in Asia, are now already put into production on-chain money. And that's the bit of maybe when we, in the book, we had a chapter on digital assets, but when I was writing it in 2023, I probably didn't write enough about it because I didn't see the change coming so fast.
Sometimes when you're writing based on what you see happening in the financial institutions. And I think we just had an event where we spoke to a number of big bank bankers, and they said resilience has been redefined, where it used to be about fraud and risk, but now resilience is, am I going to be ready for what comes down the line? So there's things that are happening on stablecoin and blockchain and all that, and how fast cloud took off. And blockchain made it so that the future is a lot tighter. We can define it, but then AI throws a curveball. In 2020, in October, I think it was October 2022, not quite 3 years ago, it really changed the dynamic of how quickly things can be done. What have you seen? We'll go back a little bit. We'll go back to open banking, because I don't want to skip that phase, because actually that was really the UK that has still had the lead in the whole open banking phase. How does open banking, stablecoin, and AI, how's the confluence of those three come together to really change what's possible?
Sure. So it's kind of interesting. Open banking has, obviously from a legislative and a regulatory angle, been led by the UK, but in production or in use, in a slightly unregulated, anarchic way, the US has probably been ahead of the UK, or the rule books that the UK had then got copied around the world, including in this region, in the GCC and the Gulf. But what open banking allowed was, and it was part of the same pro-competition agenda that the UK policymakers had. So their agenda was, and this is where fintech came from, was the UK ended up having 2 or 3 of the biggest banks in the world by balance sheet in 2008.
Right.
And that meant that the taxpayer, the government, had to go and put a lot of money into bailing out these banks. Now, something similar happened in the US, but relative to the US GDP, it was a lot smaller. And the US, and this is the bit that often critics forget, the US made their money back, and some. The UK didn't. And in real terms or inflation adjusted terms, it was, and even in nominal terms, compared to the US, the UK experience was just horrible, of having this middle-sized, quite a strong economy. About, what is the UK of world GDP now? I think it's about 3% of world GDP. It's a, number 5 or number 6 economy in the world. It's actually a big economy, but it's not China.
Relatively.
It's not the US. And to have, HSBC and Royal Bank of Scotland as the biggest banks, when the financial crisis happens, RBS and HBOS, Lloyds, have to be bailed out. And then, so the UK policymakers are like, okay, we need to have a lot more competition. And so open banking is a response to that, a policy agenda saying we need more competition. And the delivery mechanism, or the tool that is APIs, is to say, okay, I can, in very simple terms, if my bank accounts, I've been a client of NatWest, National Westminster Bank, for 30 years, I think, ever since college. Oh my God, no, it's more. It's more.
Started to do the dates back.
I just did the dates. I've been a client of that bank for almost 35 years.
But how many relationships do you have beyond that? That's where the difference is.
Just one. Yeah.
And actually, we talk about a lot on the podcast where open banking is being driven by the consumer, where they're building their own open banking ecosystem.
So then if I have a new app, like I have in Dubai for my kid, one of these prepaid cards, open banking allows me to just link that card with a couple of clicks to my checking my payroll accounts, obviously with Citi, because I work with Citi. So I can just link my Citi UAE checking account, my payroll account, directly to his fintech card. couple of clicks, boom, done.
Like my son, yep.
Exactly, right? And without open banking, I'd have to onboard, fill out lots of data. It's just,
It was all paper-based.
and it just takes a lot of time.
Yep.
So open banking allows new players to come into the market, but it's not been, at least in the UK, you'll, Jim, know much more about the US than me. In the UK experience, it's not really been that much of a big game changer as we thought it would be. So it'll be interesting to see how AI plays out and stable coins, which is, I think, a question before I went off on my tangent. AI stablecoins, because AI, I've heard this is not my term. I don't know, maybe you came up, I don't know who came up with this, but the concept of self-driving money.
Yeah.
Who came up, I don't know. It's, it's a great.
We're going to use everybody's going to use it.
I don't know who came up with that, but it's a great term, self-driving money, because it just makes it so vivid and easy to understand. Self-driving cars, right? Yep. We've spent 10 years also in the Valley, in the Bay Area, trying to get self-driving cars. And now there are self-driving cars, right? So Waymo is what, 20% of all rides in San Francisco or something? So we have self-driving cars. Most of us, so me in Dubai or back in London, we jump in an Uber or a black cab. No one drives in the city, right? You drive in the suburbs, or if you're doing road trips. In the city, you just want to, someone else takes care of it, and the car is driven by, normally actually a relatively I love taxi rides in New York City.
Oh gosh, yes.
You get such great color because they're all relatively new immigrants, and but in many parts of the world, San Francisco today, a machine can do that. And just like people don't like driving in cities, most people don't like managing money.
Don't like banking.
Exactly. No one wants to. We use money to do something else.
Yep.
We use we don't wake up in the morning and go, oh, this credit card's so cool, or this mortgage is just so exciting. You get a mortgage to get a house because you have a family, right? It's the classic marketing cliche, but that's why mortgage products are sold normally with, a mom and a dad and kids, or whatever the modern blended variety of that is. That's how you sell it. You don't sell it by saying, hey, we've got this really cool, financial technique or logic built into the product. You sell it by saying, you want to live in this house. You sell a card by saying, you want to go on this holiday, you want to go on this vacation. And so most of us don't want to think about money. We just want to use money to do something else, which goes back to AI, because AI becomes your self-driving car, your self-driving finance. And so AI can take care of, you got a mortgage payment due. Is your checking account up to date?
Right.
Do you need to move money from your savings account into your checking account? If it doesn't auto balance, so my NatWest account, to give NatWest credit, does auto balance. So whenever my checking account runs low, it just pulls in money from it. So I never go overdrawn on my checking account because I have enough money. But not every bank.
It's an automated transaction. It's not really AI.
It's very simple, but it's...
And you set the parameters.
Yeah. And then so what AI can do is take those automated parameters. If this happens, do that. But do it in a more sophisticated way. They can say, okay, I know Ronit gets paid on, say, the 18th of every month, but his mortgage goes out on the 15th, and his spending patterns during the month are more front-end loaded before he gets paid. So let's pull some money out of the savings account into the checking account so that he doesn't get overdrawn. Or,
because we don't look at our statements anymore. We don't look at we use the ATM as a balance.
Right, or the app.
Yeah.
Or I always say the analogy I give, so when I fly back to Dubai on Friday, the fridge will probably, not Thursday this week, the fridge will probably be empty because my kids are all studying abroad. My wife is traveling this week. So I'm going to get back and the fridge will be empty. So I always use this analogy of I end up ordering from the car, from the airport, from the Uber. Yeah. So rather than
it gets there before you do.
And rather than doing that, wouldn't it be great that the fridge had some basic AI, some baby AI? It goes, there's no milk, there's no water, there's no whatever. And the fridge just sends out the order, and then it can use either a stable coin or it can use another kind of nano payment to just settle the payment, because the fridge will have a wallet.
Yeah.
There'll be a wallet attached to the fridge. It's not connected to my bank account. There's just a standalone wallet with the fridge, and the fridge will be able to order. But there'll be a limit.
Yep.
So the fridge can't order $10,000 worth of food.
Yeah.
Well, like I don't know, $10,000 worth of caviar waiting for me to get home.
But even if it did, there'd be checks and balances on where they're oriented from, that those parameters already been
I say just maximum order is $100.
Right. Yep.
Anything more than $100, I need to get a pop-up message on my phone, and they have to approve it. If it's $50, it can just order the. If you want to order $25 or 100 dirhams worth of food, it just does it.
Yeah.
You just pre-order. And when I arrive home on Thursday, my fridge is stocked and it's already sorted. And it can be some very basic AI. It doesn't have to be a stable coin. It could be a stable coin. For me, stable coins become interesting for micropayments, in-game. It's like, if you have kids, they're always playing whatever it is, Minecraft or Roblox. And so we have in-game tokens.
Right.
So just make the in-game token a general purpose token, and then that's your stable coin. Because when you're playing based in Dubai with someone in Bahrain or San Francisco or Seoul, I don't want to think about FX. Yeah. If I just have a coin, whether it's a USD something or a ROB something, ROBX or something, it just settles, and that's useful. Now, that doesn't mean stablecoins take over the world, because sometimes I see my friends who are, we're all selling something, right? So, I don't disrespect that. So I see posts on social media saying stablecoins are going to take over the world, and sometimes our research also contributes to that hype. Yeah. But actually, no, stablecoins will be very useful in some areas of finance. And in some areas of finance, you'll get bank tokens. Banks will have their own coins. Banks are already experimenting. Us, Citi, JP Morgan, others are experimenting and put into production for our wholesale clients, for our institutional clients who want to move money. Even today, there are billions moving daily on these private blockchain networks. So one of the things we're arguing in a report that's just about to come out, one of our GPS reports, is bank tokens, so deposit tokens or tokenized deposits are going to be a big thing. And then in some countries, CBDCs, central bank digital currencies, will be a thing. So it'll be, as you say in English, I think I'm sure you have this in American as well, it'll be horses for courses, right? Some, for a certain product, a certain activity, you're going to have a certain form of money.
And for certain people. At the end of the day, we talk about what we think is going to happen with agentic AI, with stablecoins, with blockchain, all these elements. And we sometimes just don't pay attention and thinking if it's there, the consumers will take it.
Yeah.
Heck, we can talk about in the U.S. that we're still using cash way too much.
And checks.
Oh, yeah, and checks.
And checks. You guys still use checks.
That's right.
No, the U.S. is this amazing mix of the most advanced finance,
and the most
particularly in wholesale
banking.
finance, and the most, I'm going to say backward, but old-fashioned in retail. Because a lot of the pitches that we hear outside the U.S., for fintech, from fintech founders in the US, they go, fintech solves this. And I'm like, what are you solving? That's been solved in other parts of the world.
Right.
Like real-time payments for domestic. I mean, there's nationwide real-time payments in 70 plus countries, as you know, Jim. 70 plus countries have real-time or instant payments. So when a fintech founder comes and goes, oh, I'm going to do real-time payments, I'm like, that's solved domestically.
Yeah.
Now, there are limits on size.
Yep.
And if you're a merchant, you may not get paid real time. So that's a real pain point. If you're particularly a smaller merchant, by the time Visa, MasterCard, or the bank settles, it can be days. For solo entrepreneurs, it can be weeks. Yeah. So there's still a merchant settlement problem. But from a consumer perspective, everything in most countries around the world is real time domestically. So the US is this, it's this, I guess you guys do diversity and extremes.
Yeah.
You have outliers.
Exactly. So with that in mind, you see the whole world and it's changed quite a bit.
Yeah.
Why is there so much difference in the take-up of different fintech concepts between, we've seen what's happened in Africa and South America. That was really, the payment rails took care of that quite a bit. But you saw it in China. There's hotspots that keep on changing. What's a hotspot right now, just overall for fintech and innovation do you see?
So for the last 10 years, but particularly in the 2010s, China was the hotspot. And what happened in China was you had this coming together of many factors. So if you went back to the sort of the 2000s, so pre-smartphone,
Yeah.
China is just becoming affluent. If you remember the 1990s, I don't know if you ever visited China. I didn't in the 1990s, but my in-laws went, and you hear all the usual stories of, everyone's riding a bicycle. There are hardly any cars, right? Today, China has more high-speed network trains than any country in the world by a factor of I don't know how many. China in the last 10, 15 years built the whole US highway system once over. Yeah. And had done that already before in the previous decade. So China went from having almost no, call it modern infrastructure, 21st century infrastructure, to having cutting edge. And it happened at the same time, this revolution in China, as the digital or the smartphone revolution. So for me, fintech is basically finance for the smartphone era, finance for the consumer internet era. And what China happened to experience was at scale, this whole population or large parts of the particularly eastern seaboard entering the 21st century just as the digital revolution happened. So just like America, the middle class, the famous kind of 1950s, 1960s, emergence of the middle class in America happens, and wealth broadens out in the 50s and 60s in the US as you get those kind of early form factors of computers, like computers or mainframe computers come into banking and enterprise and the corporate world in the 60s, late 50s, 60s. Credit cards appear in the 50s, 60s. So all these things that are basically part of modernity, computers, cards, all happen in America in the 50s and 60s. China is going through the same revolution in the 2010s.
Right.
And it's doing it while it's becoming rich at a scale level. Now, going forward and looking at the mid-2020s for the next 5, 10 years, where is it going to happen? Now, we all love talking about Africa as the kind of next frontier, right? And there have been examples in Africa, and full disclosure, I'm an advisor to a fund in Africa, which I've invested in. It's on my LinkedIn profile, so you can see that. They're great, the guys down in Cape Town who run Launch Africa. But Africa has delivered in pockets. And obviously, everyone knows the M-Pesa story, but even beyond M-Pesa, there have been some great innovations from fintechs in South Africa, in Egypt, in Nigeria, and elsewhere, and obviously the granddaddy in Kenya. But the challenge that you often have in continents like Africa, or even sometimes in the Middle East, is connecting consumer demand for a new way of doing things with funding and domestic capital. Because the China story was really driven by, they had this economy transforming, but they also had, yes, they had the money from Sequoia and the American VCs, and the American banks were there, the Goldman Sachs of the world and others, investing really early into the likes of Alibaba. But they also had a domestic capital base that invested domestically. And the challenge—
They can scale easily.
Exactly. And the challenge for Africa or individual countries in Africa is this: there's not enough of the wealthy individuals in Africa, like in the Middle East, send their money overseas. And the wealthy individuals in China do that as well, but they also invest at home. The big companies in China invest at home, just like the big companies and the wealthy individuals in America invest in America. Right. And I know it's a political thing right now, but it's happened forever. If you're a billionaire or a big company in America, you invest in America. The challenge for the Middle East and Africa is and this event here we're doing this at, is part of the sort of the policy response, I suppose, is to make sure that we don't just send money out from Africa, from the Middle East or India. You reinvest in the opportunities and you develop a local kind of ecosystem, because that's what you said. We were talking about Shenzhen.
Yeah.
So what Shenzhen did really well, or Hangzhou did, which is where Baba is based, Alibaba, Shenzhen, which is like lots of companies, Ping and others are based.
WeBank, Huawei. Yep.
They have an ecosystem. I know it sounds like but
it feeds on itself. I mean,
Exactly.
you go to Huawei, they're very connected to WeBank and the way
Right.
they do things. You look at the campus of Huawei, which the innovation campus is astounding.
Is it? I've not been.
Would never expect it anywhere else in the world than there. Yeah.
But the Valley has that, right? Because you got to, why does the Valley and the Bay Area have this ability to? 10 years ago, people, particularly in the rest of the world, including in China, were saying, yeah, we're the future. America's finished. I'm exaggerating to make a point, but it became a little bit of a consensus, 6, 7, 8 years to go, yes, the best days of the Valley are behind it. And look at it now.
Yeah.
Like during COVID, everyone was like, let's go to Austin, let's go to Miami, let's go to Dubai, let's go to, I don't know, Mexico City. And now, if you're in AI and you're not building in the Valley, you're kind of missing a trick.
And now Austin, there's new hubs also.
But the hub point is really important, like having Stanford there, having Sand Hill Road, having the entrepreneurial community and the mindset.
Yeah.
I was on the journey here. I was chatting to an old dear friend of mine about what's happening in Europe now. I know Europe's a big place, 40 plus countries, but there's this kind of a lot of this is about mindset. In America, for all its issues, there's still a mindset of, among some people, tomorrow will be better. I can build the future. That mindset exists now in the Middle East. It exists in China. And that mindset, it's really hard to bottle, but it's not about the talent.
That's how scale can get.
Exactly, yeah. And so I think that mindset, if you can encourage that, that's what your answer, your question, which I haven't really properly answered, is like, what's coming in the future with AI and stable coins?
Let's take it out a little differently.
Yeah.
What right now is underhyped? In other words, you think is going to be bigger than people even realize?
Generally, what's underhyped or under-discussed tends to be B2B. Let me explain. So in our sort of public discussions on podcasts, in the mainstream media, on social media, we tend to over-index and over-discuss B2C, consumer. Why? Because you can touch it, we can feel it. Everyone listening to the podcast understands it. I always, having been in traditional finance for almost 30 years, I always say people outside the finance industry simply don't understand the scale of the amount of money that moves around. The amount of money that goes around every day, every night is gargantuan. And money has become, over the last 50 years in America and the rest of the world now, an industry in itself. And you can debate whether that's a good or a bad thing, but it's become and the scale of that is usually, I read so many articles or tweets or whatever they're called now, X's or LinkedIn posts saying, oh, we're moving $1 billion a day. And you're like, that's cool. You're doing $1 billion on this stable coin or that fintech rail. Bravo. I wouldn't be able to build a business doing that. Full respect for that. But do you realize the biggest bank in the world, biggest American bank, moves over 10 trillion a night? 10 trillion. We move about half of that in our bank. It's insane, these numbers. And that's what people who are not in the B2B world completely miss, is the scale of capital. And this is where America is just so
and the ability to do this now with digital. With the digital world, the ability to build a platform around B2B, which wasn't there even 3 years ago, is now there.
Yeah. And this is going to be really interesting, because a lot of this B2B, at least on the margin, is moving to tokenization, is moving on chain. So we just had a couple of days ago NASDAQ's announcement that they're looking to.
Saw that,
So, and we just put out a report about the future of post-trade with our colleagues in in services, security services, looking at, we interviewed like over 500 of our clients, and they were saying they think 10% of transactions, securities transactions, could go on chain like within a few years. Now, I don't know if that's going to happen as quickly, because this takes time, but there could be transformative reconfiguration of the rails or supplementing of the rails that exist today. And that's sometimes hard for people not in finance to just grasp how big the numbers are, and secondly, the plumbing that's
Yeah.
being reconfigured. Because most of us don't care about the plumbing, right? It's like the internet.
Yeah.
We use the internet, but do we really know about all the internet cables? Like, I mean, the other day, I think I'm not going to speculate who, you can look it up online. One of the cables that one of the Microsoft cables that feeds the Middle East and India got cut. And suddenly, internet traffic for a few hours, internet really slowed down. You're like, hang on.
That's not supposed to happen.
That's not supposed to happen. Like, you just
the
forget
lights are going off.
You just
Exactly.
forget about like the physical infrastructure that backs the digital world we live in. And there's a lot of that physical infrastructure that's going to be, or the financial physical infrastructure is going to be replumbed.
Well, and just from the power, the dynamics of electricity and utility generation. Okay, so we talked about what's underhyped.
Yeah.
What do you think's overhyped right now?
Overhyped? Oh, oh gosh. You and I both know of this concept, as most of the audience will, of the hype cycles, right?
Yeah,
so
right.
I think Gartner and others have this concept of the hype cycle,
Right.
and you always have to. I totally get why you need a hype cycle, because people go, "Oh, it's overhyped," and I'm like, so right now it'd be AI because it's overhyped. I'm like, yes, but every big transformative project gets overhyped. It has to be for two reasons. One is it's a bit like when the railways were being built in England in the 1830s and the rest of the world in the 40s and 50s in the 1800s. If you don't have a hype cycle, you don't bring in capital. So even Charles Dickens was writing books about this, saying everyone in London is going crazy. This is in the 1800s, mid 1800s. Everyone in London is going crazy over the railway bubble. And he was like being very sniffy about it because he was obviously, not approving of this. And every new, I'm assuming when electricity came, there was a hype cycle around it. Everything that we consider like just infrastructure today, there's a hype cycle. And like when America decided to put a man on the moon, when JFK made that speech, we're going to put a man on the moon, there was a hype cycle around it, right? There has to be.
But it got the momentum to actually make it happen.
You need to have a hype cycle to get in capital, to get people to build the future, and also to convince the users. So in whatever it is, the project, so that this is something you need to use.
Right.
So I think by just looking at the sheer volume of capital going into AI or AI adjacent areas, that's the obvious big hype cycle. Yeah. But is it overhyped? They'll probably
timing may be off.
Exactly.
But yeah.
So maybe next year.
All the time.
I think what will happen next year is people will go, or is it happening even this year? It's not really changing how we do some of our day-to-day activities that fast. It's changing certain things like coding, summarization of information. But then you'll probably find in 3 or 4 years, you go, wow. I think it's the Bill Gates quote, right? We underestimate
what's going to happen,
change in the long term, and overestimate in the short term. And so I think that's probably the big story for the next 5 years.
And finally, since we're in Riyadh, since we're in Saudi Arabia, since we're at Money 20 in the money pot, what excites you about what you've seen over the last couple of days?
So, as you know, I've been in the region now for almost 10 years. Maybe I was a little bit too early to come to the region, but I'm glad I moved early rather than late. The single outstanding feature, whether it's of Saudi Arabia, of Riyadh, the UAE, Abu Dhabi, Dubai, is vision. And I know it sounds soft and waffly, but in the 1960s, the US had this mission, right?
Yep.
I'm going to put a man on the moon. I'm going to put a human on the moon. Countries that are young and youthful and optimistic have these visions.
Yeah.
And it's the easiest thing in the world for us to be a little bit cynical and a little bit, this is overdone. But we're seeing the flip side of that in Europe right now. And sometimes also in the toxic zero-sum politics in the US, which is if you don't have a vision for the future,
you won't get there.
And you end up fighting about in zero-sum politics. And there are lots of challenges for all these countries in the Middle East, in the GCC. But the biggest advantage they have is that the leadership is,
very open.
and tomorrow is going to be better.
It's the most interesting thing. Because I come to the region quite a bit. The difference between the different countries is astounding.
Right.
The competition between them is astounding. And then you look at the World Cup last year, the cooperation between the countries is astounding, given all the other dynamics. I kid about the fact that many people think that, within the region, think that Dubai, they're like the petulant child that can't get out of its own way, but is always, as you said, the vision's always there, the look. And they keep on jockeying for position. It's exciting. We're out of time, but thank you so much for being on the show. Finally.
Thank you for having me.
I had to come to see you. And
Thank you for having me. It's
me.
been a pleasure to have this
Thank
conversation.
you very much.
Thank
Appreciate
you.
it.